John Higgins, Mortgage One. Happy Monday. So if you take a look at today's update, we have a lot of cross currents going on right now that has kind of driven rates to levels that we haven't seen really since last October, November. And there's a lot of reasons why that's happened. Tough talk from the Fed, economy that's chugging along, higher oil prices. All these things have kind of created a little bit of a mess for the interest rate environment. And we're looking at rates that really are sitting in the mid sevens right now in most of our programs. And what is that doing for our home buyers and basically putting sellers kind of on the sideline? If you look at a borrower that's looking at maybe a $400,000 loan today at 7.5%, that payment's almost $2,800 a month. When you look at a buyer that was out there, let's say a year and a half ago or so, when rates were closer to 3.5% or 4%, as we look back into the latter part of 2021, you're looking at $1,000 increase. That's over a 50% rise in their monthly payment, and that hasn't really cooled the buyer, but it certainly has put the sellers on the sideline. Very few of them seem to be willing to trade in their low interest rate for these rates that are above 7%. We are hopeful. After last week, we got a little bit of decent news out of the market, and rates did kind of fall off these higher numbers that we've seen, or the highest numbers that we've seen. And we've got a big week coming this week as far as numbers between the jobs number and the Fed's favorite gauge of inflation, the PCE. So we'll have to see what those are going to bring us. In the update, they mentioned that there's really only maybe a 1 in 4 chance that the Fed raises rates with this upcoming September meeting, but that doesn't mean that the Fed is going to pause here forever before starting to lower rates. There's still chance that later this year that they might actually boost rates again. A lot of it is data dependent, obviously, so we will have to watch as all that data comes in and what it does to our interest rate environment. As we head into the fall here, it looks like rates are going to continue to be tough. So have a great day. We'll give you an update next week after all of these numbers come out this week. Talk to you soon.